Friends, good evening. Today I have an update regarding the foreign institutional investor, which is Vanguard Fund. They've acquired stake in three stocks in Q4 FY25, which these stocks you can add them to your watch list. Vanguard is one of the world's largest investment management companies, known for its low cost mutual funds and exchange traded funds. It offers a wide range of index funds and actively managed funds catering to both individual and institutional investors. As per the latest available information, Vanguard Fund publicly holds 39 stocks with a net worth of rupees 44,769 crores. APL Apollo Tubes, India's leading branded steel products manufacturer, is primarily engaged in the business of manufacturing resisting evil tubes. Vanguard Total International Stock Index has made a fresh position in APL Apollo Tubes in Q4 FY25 by purchasing 1% stake, 28 lakh equity shares in the company. The second company is Home First Finance Company with a market capitalization of 10,262 crores. The Home First Finance Company Limited is primarily engaged in the business of lending housing loans for the purpose of purchasing commercial property, loans against property and construction finance. Vanguard Total International Stock Index Funds has made a fresh position in Home First Finance Company India FQY sorry Q4 FY25 by purchasing 1.01% stake or 9 lakh shares in the company. Eternal Limited. Vanguard Total International Stock Index Funds has made a fresh position in Eternal Limited, which is Zomato, in Q4 FY25 by purchasing 1.01% stake or 1,063 lakh equity shares in the company with a market capitalization of 2 lakh crores. Was formerly known as Zomato. Through an internal portal, the company connects users, restaurant partners, and delivery partners. The segment includes food delivery, B2B business, quick commerce, and other segments. So we'll go through some information here. Right, this is Apollo Tubes. You can see 1587. Last 5 days it has rallied 10%. 1 month it's about the same 10%. Then the last 6 months 1%, which is good, and over the last 1 year 3.61%. So the company hasn't actually lost any market price or hasn't lost value. It has managed to stay in the positive, though could have the overall performance could have been better than 3.6%, 3.61%. So looking at ownership strength is slightly missing the benchmark. The company is at a premium valuation at this point. Company knows very well the utilization of its assets. The company possesses stable growth history and manageable debt. Then 44,109 crores, cash 73, debt 130 crores, promoter holding 28.3%, sales growth of -3%, ROE 16%, ROCE 22%, profit growth -11%. So comparison to other companies, you can see that the price of most other companies is less compared to the price that this stock is available. Again, you can see the comparison in terms of market cap. The most important ratio here is the ROC and ROE. You can see Jindal Stainless, JSW Steel, then APL Apollo Tubes, Motherson Sumi Wiring, Welspun Corp and Ratnamani Metals are the ones that are really doing well. You can add Jindal Saw to this list as well, so you can compare those 5 6 companies and consult a financial stockbroker to see which is the best sort of investment option that you all can have over a long period of time. Then foreign institutional investors 31.7%, promoters 28.3%, DIIs, that is direct institutional investors, 16.76, public 23%. So again, this stock would be highly volatile compared to the shareholding value of public 23% and FIIs 31%. So the market can turn volatile if FIIs decide to sell their stake, and that would mean the public shareholding would increase and the price of the stock would be fluctuating. So moving on, the company has shown good profit growth 43% in the last 3 years, good revenue growth 32% in the last 3 years. Company has decreased its debt by 268 crores, maintaining healthy ROC 27% in the last 3 years, ROE 22% in the last 3 years, virtually debt free, interest coverage ratio of 13, which is very good. Company is trading at a high PE of 182, which is really negative sentiment against the company. Company is trading at a high EBITDA of 89, almost 90. It's the first India's leading branded steel products manufacturer, headquartered at Delhi, runs 10 manufacturing facilities, churning out 1,500 varieties of pipes, galvanized tube, pre-galvanized tubes, structural ERW steel tubes, hollow sections to serve industrial applications like urban infrastructure, housing, irrigation, solar plants, greenhouses, and engineering. Uh, Company's product portfolio comprises of different products used in building houses, warehouses, factories, skyscrapers, and industrial activities. The company is gradually decommoditizing its product portfolio, and company innovated to the world's only company to make steel tubes with size range of 10 to 10 mm to 1000 to 1000 mm and thickness of 0.23 mm to 40 mm. As of 24, company has 16 registered patents in its name. Then this is some more information. FYI, we've been through this already, some of this. Stock is trading at 11.5 times its book value, decreased shareholding of -6% in the last 3 years. Company's median sales growth 23% in 10 years. Healthy dividend payout of 19%. Some other comparisons compared to the other companies. Again, here return on capital is the main feature that you look at. Jindal Steel 13, JSW Steel 13, Jindal Stainless Steel 22. So you can see 3 4 companies that you can really look at. You can ignore Tata Steel, you can ignore SAIL, because their return on capital employed is 7 to 8%, which is quite frankly quite low. And comparatively, you can see sales have been steady, but there is no growing trend of sales. Profit has grown, which is a good sign. Overall, companies has grown its profit quarter on quarter, which is a good sentiment to have, and the company would be doing well based on this parameter. Again, you can see overall sales compared to the last 3 years haven't really gone up too much. So the overall net profit compared to the previous year is less than that. So again, would impact the overall sentiment of the company in the long run. Sales growth 12% in the last 12 months. Profit growth -17%, again a big concern. Stock price 4% in the last 1 year. Overall decent in the last 5 years, 66%. Return on equity about 22% average. Reserves are increased, so which is a good sign. Then we look at the Home First Finance Company. I think we've covered this in one of the recent videos done 2-3 days ago. I just an overview. 2% up today, 19% up in the last 5 days. So I think it was one of the companies that did well. I think due to the foreign institutional investor investment by Vanguard here. That is the reason why the stock has done well. So I think we've been through this 20% in the last 1 month, 2% in the last 6 months, and 36% return in the last 1 year, which is an amazing return compared to the sentiment of the market in the last 6-8 months, which has been a downward trend. But the company has been able to achieve a 36% return, which is an amazing feature. So maybe you can look at the financials on how well the company is doing, the kind of loans that it provides, and the kind of uh, business that it is able to generate. So home first, some basic information. Company is a technological driven provider of affordable housing finance, catering to first time home buyers from low to middle income segments. Primarily serves families earning less than 50,000 monthly, offering housing loans for home purchases and construction. And this is the price range. ROE about 15%, which is good. Face value 2 per share. Stock is trading 4.7 times its book value. Low interest coverage ratio. Promoter holding is 14% only. Company may be capitalizing the cost. Promoter holding decreased in the last 3 years by 19%. So again, something that would create a lot of volatility. So some other comparisons in the market. This is something the financial stockbroker may be able to explain and suggest the ways. Though you can see the revenue has been growing quarter on quarter, overall you can see profit has also increased. Net profit has also increased, so which is a good sign. Then this is Zomato. We I think covered this as well in one of the recent videos in the last 2-3 days. This also stock was a part of the rally that the company has made. You can see in the past 1 month it is a negative return on 1.67%, though there was some investment uh, by some company. I can't exactly remember by whom, but however, it is one of the uh, big players in the market who's holding a substantial amount of stake in this company. 16% negative return in the last 6 months, 15% overall growth in the last 1 year, which is amazing. Then we look at some other information. Market cap, you can see 2,22,000, 2,23,000 crores. Dividend yield is very low. Return on capital is very low. Um, this business model may not be the best, however, considering that the company is uh, see, you can see book value is only 22 and the company is trading almost at 11 times its book value, which again would be suggesting that there is good growth potential in this company. Uh, Company is almost debt free, working capital requirements have reduced to 46 days, which is amazing. Company has another income of 944 crores. Again, that could be a major sentiment driver in the future profitability of the company. Low return on equity of -5%. Some company comparisons. I think by far Uh, not one of the best profit earning companies though in terms of market cap, the biggest company. And again, here you can see the sales and revenue have been growing. However, the net profit has dropped drastically in the last quarter. Again, going to impact the sentiment of the market. You can see net profit has improved comparatively drastically compared to a minus 970 crores. It is now profitable to about 663 crores again, which would be a positive overall. Sales growth 69% in the last 12 months. Profit growth last 1 year 5000% profit growth. Amazing. Stock price growth 25% in the last 1 year, which is good. Reserves are gradually increasing, so it's a good sign. So I think that is all for today, friends. Thank you for watching. Please share this with your friends, family, and associates. Anybody interesting to gain more information, please do share your feedback. It will help me improve the content. And what else would you like me to add? Please do let me know. Thank you. Thank you so much. Have a good weekend, and we'll connect with another video tomorrow. Thank you. Take care.